Looking at the Kenyan markets now, that market after the exuberance which are characterized as such the day before, we saw that market pulling back slightly today, and we've got a drop of 1.5%, 4,911 who closed it today after 7% of gains in the last two trading sessions. Let's take a look at the Kenyan currency, and that currency unchanged again today against the US dollar. Perhaps there's something wrong with our graph there. The Kenyan shilling does move quite strongly against the US, but we'll take a look at that one and advise you on what's going on there. Let's cross over now to Nairobi for an update on what's moving our market, and we're now joined by Crispus Otieno. He is fixed income dealer at AIB Capital. Crispus, thanks for your time. So the market jump that we saw yesterday and the day before has not been repeated today as I expected, but the broker I spoke to yesterday said he expected more gains today. Are you surprised that today we booked some profits?
Really, I am. I'm surprised, but the rally is actually a characteristic of a bullish market, of a rally. This is just a small drop, because going forward tomorrow and Friday, I expect the rally to go on. This is just a step in the backwards, but okay. I expect it to go up.
Okay, so tell me why you expect the rally to return, because as we have been pointing out in the interviews that we've been carrying with the brokers and other commentators that have been coming to studio to talk about the Kenyan elections, the election decision is being contested in the Constitutional Court by the losing party from CORD, which is led, of course, by Prime Minister Raila Odinga.
The challenge with Kenya and any other African country is to disassociate itself from politics. I mean, business and politics ideally should be two separate things. And I think I think this has been exhibited in the Kenyan scenario, where despite us heading towards a point of political turbulence, the equities market still managed to come up. So I still strongly believe that it will come up, given that more results are expected on the equities market, and also, well, if the foreign institutions looks like they've given us a vote of confidence.
Given Kenya a vote of confidence, and I think the rest of Africa is celebrating that the country is quiet even after that result. But talk to us then about where the money is going and where the money is likely to go, because you're seeing gains tomorrow as well as Friday. Where would you be putting money?
I'd still be looking at the banking sector, of course. They've been on we have witnessed continuous growth all through. I'd also be looking at Access Kenya. We've just received the results, 38% jump in profit. So that I would put my money there.
Okay, so you go into banking, and of course we have seen those banks posting some very good results indeed. Outside of the banking sector though, where would you look? We had the results coming from Access Kenya yesterday, and those results didn't look too bad. I mean, a 62% jump in profit before tax is impressive in anyone's books. But going forward, people are talking about pressure on the ARPUs, that's your average revenue per user margins.
Really, the whole market. I'd like to give you some facts here. In 2007, the market average P average went up to 22%. Yeah, we are still at 12%. I still think there's a lot of room for growth. I'd also be looking at stocks like KPLC and Kenyan. Those ones, I believe. I think there's still value there.
What about
the banking sector?
Yeah. What about the market where you sit? Your fixed income, and we have seen rates unchanged by the central bank yesterday, deciding to keep the benchmark rate at 9.5%. Do you still see scope there that perhaps bonds could become attractive as the central bank reduces interest rates going forward?
Central bank reducing interest rates. First, I don't think interest rates are going to reduce going forward. I think for the next 2 or 3 months, we are going to see a situation whereby yields will be coming up. So we have a primary next week, the 10-year and the 2-year. We've just seen that the government has a shortfall of cash. So what do we expect? We expect yields to go up because they'll be forced to borrow expensively from the private sector.
Right. So they borrow expensively from the private sector. They will be crowding out the private sector even as they are trying to raise money for on their side. But when you look beyond the noise that we're currently having, on the inflation front, aren't we likely to see pressure coming in? I mean, we did see food prices coming under pressure earlier in the year, and some people are saying the world is still very much uncertain to be certain that the central bank is likely to say, tell you what, these prices are going to come under pressure going forward, and maybe let's look at our rates again and reduce perhaps.
I still don't agree with you because we are seeing inflation coming to a level where it's 4%. After 4%, where else downwards do you want it to go?
Well, I would want it to go lower because, as you know, that stimulates economic activity and therefore perhaps likely to help in terms of getting business to borrow again and creating more jobs, because what, of course, Kenya needs as well as Africa are jobs.
I agree with you. But typically, and has always been the case, 3-4% is the lowest we get. After that, we need to. I expect it to go higher. Look at fuel. Fuel is one thing I expect to go up. Food prices a bit. Yeah, I expect inflation to go up a bit, maybe by 100 basis points.